Good afternoon. Thank you, everyone, for joining us. We've got a very distinguished panel, and we've got 30 minutes. So we are going to crack on and go through this, as we've got a lot of big topics to try and cover. So we are going to get started right away. Ivan, as you're in the hot seat sitting right next to me, we'll go to you first. The theme of this panel is an expensive, complex and slow industry. How do we build the business models that are ready for the future? What's your sense of, is that a fair description of the mining industry as it exists in 2026 to begin with?
Well, thank you, and I would say that is not probably an accurate description. I would suggest to propose a different narrative. I think the industry, as you know, for critical metals is going through a very critical period in the sense that there is a turning point. Critical minerals are needed for national security, electrification, new technologies. And therefore, I would say this is an industry that has momentum, that has adaptability, and that technology is changing the way that we operate and develop projects. And therefore, it has proven to be responsive when the enabling conditions are there. And I think the conditions that enable mining to move fast, to be responsive, as we have a track record of doing, are simple and a few. But some of them, to mention, is permitting. Permitting, we know that permitting for projects takes a long time, 16 to 18 years in some cases, and therefore changing and reforming that is something which is a key enabler. And we're seeing some countries, if you look at, especially in the Americas region, from Canada through Argentina to Chile, there is reform going on the permitting space, and I think that's a key enabler. And another one has to do with simply, policy support, tax invariability, novel financing models, and also, I would say, the collaboration of governments in collaboration with the private sector to be able to integrate mining into the social fabric of communities is key. So when those enablers are there, you'll find that mining can be responsive, can be quick, and we can develop the minerals that the world requires. And I would say it's not only that, obviously, it's also execution capability as well. And I think the market is differentiating more and more between those companies that are able to have execution capability and from those that don't, that can move efficiently, can move fast, can partner with the right partners. And I think that's also quite distinctive. And just to say a final word, we at Antofagasta have operations in Chile, and from that point of view are developing a significant growth platform where we are transforming our business by growing almost 30% and also looking into other regions to continue to expand. But I think in summary, enabling conditions are critical, and this is an industry that's got momentum and that it's ready to respond and has a track record of being responsive when the conditions are there.
Paul, what's your sense of this? Is the industry right now on the right trajectory for addressing some of these challenges around capital constraints, around the speed of being able to execute to deliver the demand that's on the horizon?
I'm going to focus on the expense side of things in your initial question, and is it more expensive, and how is the industry addressing that? It does cost more to build mines today, but we all know it's economics 101. The incentive price needs to rise so that you can get a return for projects to get built. So it's all relative, and as prices do rise, the returns are there. But what has changed, and we see it, copper is a great example, but in so many different minerals, average head grades are going down. So it means to build an operation, produce the same amount of metal, you have to build it with so much more throughput, and that means much more capital up front. So what is happening is the industry is becoming a lot more capital intensive over time. And how do you address that? Part of our investments are also in the oil and gas industry, and I think there's a lot to learn from that industry. Oil and gas industry is much more prone to partnering. With that big capital cost, you have to share the risk. So you've got parties that are working together to do that. I think the mining industry is moving in that direction. I think it is doing a great job of it. I think, super example, one of the big copper projects out there to get built is Vicuña, and Lundin has partnered with BHP to get that done. I think that's going to be a model that will be one for success in the industry.
Marna, we just heard from Robert about this huge demand that is on the horizon for a lot of the metals that you're involved in looking at. How are you addressing these challenges and being able to ramp up speed of execution for delivering some of these projects?
Yeah, so I think there's truth in your statement on slow. The slow part of mining is exploration and finding tier one assets, and we've been fortunate to do so. And then you can act speedily. I think we've done it successfully at Kamoa-Kakula, where we've executed Kamoa-Kakula within a 3 to 4 year horizon, expanding to a fully integrated mine, producing close to 400,000 tons of copper. So it's possible. And I think with critical metals on the horizon, you know, the energy transition, we've received the biggest purchase order in history. So we should make this industry work. I think it's an attractive industry. It's the fundamentals of everything we do. Everything you see here is either farmed or mined. So it's a fundamental industry to the future of many generations to come. So possible to make it attractive, possible to do it fast, but mining companies should do more exploration and invest in finding new tier one assets. And that takes us to different jurisdictions than where we were in the past. And we should be able to take on that risk.
Yeah. And Andrea, what's your perspective as you look around the world and see and work in lots of different projects through Hatch? You know, what's your sense of where are the places that are getting it right, and why is it that what are they doing that is enabling the industry to move at pace and at scale?
Yes, thank you, Matthew. And look, before I answer your question, I would just like to thank our partners and clients here in the Kingdom and say that Hatch is truly honored to be invited to participate and support Plan 2030. So back to your question, I would like to add one dimension to the discussion is the increased complexity of the mining sector, which is, I've spent all my life at Hatch in the professional services business, and never before, I would say the last 5 years, I've seen the degree of vertical integration where the mining industry is extending further into midstream and downstream applications, integrating towards the chemical industry or the manufacturing industry, sometimes almost overlapping with the automotive industry. So on the back of this level of complexity, where we see people doing it right is when they put together great teams with overlapping bodies of knowledge, so that there are minimal gaps between the individual areas of expertise, and where owners also tackle and own the risks as much as they can afford to. And I think when owners manage the risks surrounded by a good team, then that's where we do things right the first time. And we achieve these goals of sustainability, ESG compliance, but also find creative solutions for fast tracking in a cost-effective way.
Yeah. Wang, what's obviously the theme of last year has been technology and has been artificial intelligence and all of these ideas. How is technology, do you think, able to help the mining industry to be able to be faster, to be more efficient, and to address some of these issues that we've been talking about?
Mm-hmm. If you had asked me this question last year, I want to have been too social. But for this year, this time, I have to say AI technique. Take exploration, for example. Cobalt mine, which is from US, have raised $300 million to improve their exploration efficiency. Meanwhile, there's a lot of Chinese open pit mining. They use unmanned drive car to transport ore. Not to mention, there's a lot of lighthouse factory in China. They build a lot of equipment in China. So it's very sure AI will reshape our industry for future.
Yeah. And Tristan, for you, how are you thinking about adopting technology and using technology as a way of improving efficiency, improving speed, And also, can you start to then as well touch on some of the sort of the regulatory environment as well, and how that can help to enable the industry to move faster?
Sure. Look, I think mining companies, traditionally the view would be that adaptation of new technology brings disruption. And when you're operating a very large plant, it's the disruption that gives you the heartache. How do we avoid stopping the plant for a day? And that would go everywhere from software into hardware. And we found actually that innovation is achievable on the margin. So, for example, we're deploying right now, and we've just brought into a level of commercial production the first rail-run conveyor in the world, and that is a conveying technology that uses 30% of the energy of conventional rail. We wouldn't be able to do that unless we had redundancy in the system to be able to put that new system in place under the assurance that we can continue to meet our daily operational targets. And similarly with new technology. It's very much at the increment. It's very hard to implement a brand new technology that dominates the process plant or dominates the way that you do things, because that's very much a novel way to work. And in the meantime, you have to keep producing, and because we're a capital-intensive industry, every day matters in terms of that return. I think as part of that and looking to regulation, because we're a capital-intensive industry, it's where regulation impacts on timing to return that has the biggest impact. So we talked about permitting, we talked about regulation, but really what mining companies need because of this capital intensity is a level of stability. We can't control the copper price, we can't control metal prices, we're price takers. And in this world of volatility, where are the areas that we can seek some level of stability? And so regulatory functions can absolutely provide that. An enabling environment will give a mining investment a level of, because we won't be able to control all factors, but certainly to be able to see a regulatory environment through the future, and that gives you the confidence to invest.
Yeah. And just to follow up, what's the biggest headache for you in terms of managing a global business and trying to respond to this demand that you're seeing, where there's a lot of calls on you, everybody sort of wants things tomorrow, and that's obviously not achievable. What's kind of the number one headache for you in trying to manage through that?
Yeah, well, look, we've seen this for a long time. I think we've been talking about the crunch in supply coming down the pipe for many years now. And I think the change this year with the move in copper prices, that's been combined with a geopolitical aspect, which is providing some of that pressure on delivery, but also in disruption. And the disruption illustrates how challenging the industry is. And I think actually many in the West have outsourced that for 30 years or many decades and just put it beyond sight, beyond mind. And I think what the opportunity now is that's very much coming back to fore. And so bringing mining back to the debate about energy security, national security, is enabling now a much easier discussion around that. So I would say to your question, it's improving the environment by which you can have those conversations. And it was previously much harder to have the conversation, and that was the headache. That's enabling the lack of patience. We need the copper now. That is present in the copper price, and we would see that continuing because the new greenfield projects are not happening. We've seen a lot of brownfields, but in order to develop those next greenfield projects, I think everything that people have spoken about here are the areas to concentrate on.
Yeah. Ivan, how are you looking to respond to this huge demand that we have on the horizon for metals and minerals? And what sort of conversations are you having with various governments and regulators about trying to enable you to move faster?
Yeah, as I mentioned, one of the things that we're doing is growing, and I think we're probably one of the few that will deliver around 30% growth, before the end of the decade, and that's happening now in the sense that
is that what, in terms of output or?
In terms of output,
right.
In terms of output, copper output. Yeah? So we're very much into expanding our brownfield operations, our two main districts, and that will deliver that 30% growth. But in the kind of things that, beyond engagement, with the authority around, reforming permits and the like that we focus on has been one, capital intensity, and that's been mentioned here. I mean, we know that to grow our business, we need a lot of capital, and therefore options and innovation to make that growth more lighter in terms of capital have been important. And one of the things that we've managed to do, and I think it's something that will continue to happen, is that some of the ancillary infrastructure, for example, around power or water supply, we find that there are infrastructure funds that are interested in holding positions there that have a cheaper cost of capital and therefore can add value bringing them in. And I think structuring, therefore, transactions which have that in place make our investments and our growth easier. We've managed, for example, to sell some of our water systems and then purchase water as a simple supply subsequently, and that's essentially provided us with cash that's come from that sale, and also we sort of don't do the investments of expanding that, which also provides a cash relief and essentially makes that growth lighter in terms of capital. Today we're achieving a rate of investment in our expansions of around $20,000 per ton of capacity, which is quite low compared to what a greenfield would require. And the other one, I would say, it's technology. Again, it's using technology both in terms of our operations to make them more predictable and safe, and also in projects. I mean, what we find is that digital engineering, pre-assembly, advanced planning in project is making construction times shorter and is de-risking some of the construction risk. So I think those are key elements to bring into what we do as we sort of expand and grow, which is what we're doing right now.
Yeah. So, and Paul, just on this point around the capital intensity of the industry, is the fact that I think it's been mentioned a few times over the course of the day that we're getting record high prices for things like gold and silver and copper. Is that bringing in the investors now that the industry needs? Are they seeing that there's returns, or are people more worried now that are we at some sort of bubble at sort of current valuations? How is the industry sort of dealing with that?
I always find with companies, you go through cycles. And when you're at the low, prices are low, investors themselves get very conservative. And they say to companies, we just want to return a capital, we don't want to see any growth. But then as commodity prices rise, investors get more aggressive and start moving more to a growth footing. We invest in two industries, principally the gold industry, and then the other areas is a lot in the copper industry. Gold mines tend to be smaller. That cycle happens a lot faster. And so we've seen that. Gold prices have come up. You've seen a good cycle of building new gold projects the last few years. The copper industry, much, much bigger projects, and that is a much slower transition. You need to see higher prices for a longer period before I think companies have investors giving them the go signal for new projects. I think at these prices, we're very close. I think you're going to see a good amount of very attractive projects that get commissioned over the next few years.
Yeah. Marna, with prices, commodity prices at these sorts of levels, are you finding it easier to attract funding in for the developments that you need?
The problem is it's a long-term business.
Yeah.
So, and it's cyclical, as you say. So I would like to say that we plan the execution of our projects to come online when the commodity prices are the highest possible, and we plan our revenues that way, but that's simply not how it works. When you have tier one discoveries or you have expansion projects that make sense, and you have a certain threshold that you want to reach, that your capital profile that you're happy with as a company, I think growth projects should be on the horizon whether commodity prices are high or low, and that you should ride out the cycles. You should plan what the demand will be. And the fundamentals of certain commodities are there, whether the price is high today and low tomorrow. Copper is very reactive to macroeconomics, so it's not really always based on the fundamentals of copper. Trump makes a statement, the whole industry collapses. He makes another statement, the whole industry. So it's very reactive. So a project on its own must make sense. It must be able to ride a minimum threshold, and companies should plan ahead to make sure that we can meet the global demand for copper. Referring back to Robert's previous presentation, I think a commodity like copper will always have support, and therefore you can, in a period where there's lower pricing, which is not what we are in now, but you can plan for future expansions already and start getting ready to do those expansions.
Yeah. Andrea, are you seeing that permitting has been mentioned as an issue? Are you seeing that governments are reacting to that as being the biggest impediment in terms of that speed of getting new projects developed? Are they engaging with the industry on trying to make sure that they address some of these issues?
Well, definitely yes. They're seeing it as a I would say a key element that slows down the execution of some projects. I'm not sure they're getting to the point where they're yet speaking to the industry to understand what is needed, but you definitely see a momentum towards removing the bureaucracy away from permitting without compromising the ESG impact of the exercise itself. And it does get some reactions from the public, as you can all see, but it is going to be an important factor in helping projects move forward faster. I mean, it's always on any mining project, the permitting is on the critical path. And then engineering, procurement, and construction are all tailored and sequenced around the permitting. So with this change, now we're going to have to rethink how we sequence all that. We cannot just accept that permitting is going to be progressing faster, but do things in the same old sequences. So we really need to put our smarts together to find ways to accelerate with that enabler. But I'm hoping to see more of it. We're just starting to see it in North America this year from both the Canadian and the US government. And definitely here in the Kingdom, there's an ecosystem that is very favorable for fast-track mine development.
And do you think that governments and regulators are getting it right in balancing that need to accelerate the industry whilst also considering the environmental concerns and the areas that have in the past led that to being a slow and laborious process?
Look, it's, it remains to be seen if it really deploys to the extent of their intentions, but I'm very positive because I've been personally involved on some projects where we collaborated with the permitting authorities and the government to expedite things without compromising, and it worked. But you need some very capable individuals to lead that discussion with them because governments never want to come across as being compromised or biased by the industry. So having those individuals who bridge the gaps. My theme today is really these overlapping bodies of knowledge and that interface management. This is where value can be eroded or harvested. And in this case, being able to have a dialogue between the permitting needs and the status of engineering and project development and making sure that we just do what is needed and not more than that, and that they understand that maybe more information is going to come at a later date, etc.
Yeah. Wang, one of the issues that I think has been mentioned as well a few times, and in a few of the conversations that I've had around the event, is there's also the human capital challenge for the industry. You need to develop the skills base that is required. So how serious a problem is that human capital element for the mining and metals industry, and how does that get addressed?
The mining industry has always been troubled by shortage of qualified personnel, and it's pretty universal from developed country to developing country. For example, in Australia, just in Queensland alone, there's a shortage of about 5,000 people, ranging from workers to engineers. In China, even though we have the largest number of mining students in college, but it's only 10% student is working in mining industry. But in Africa, there's another situation. The 80% of students, the lack of skills. If they're willing to go to our mining industry, this takes a long time to scale them to go to our professional worker. So, truth is, without enough workers, engineers, and managers, so this is mining is face challenges in completing constructions and achieve ramping up targets on schedule. Here's a real case. We bought a copper mine 2024 for just $1 because this mining is under development for 10 years. It's just reached 78 potential capability for their producing. So it's impossible to make money because lack of workers and engineers. So I think look ahead. I think a few key steps should be taken to solve this problem. First, we need to invest more in university education and practice more workers. And second, I think we need to take more new technique, such as AI technique, involves our industry, because if the top engineers then take their experience on the AI agents to efficiency our new generation to lighten their hard work. So the third, we think we need to bring more automatic machines to our industry, such as automatic jumbos and automatic self-drive cars to lighten workers' hard work, so they can maybe solve out these kinds of problems.
Yeah. Tristan, how much are you worried about human capital coming into the industry and that being an impediment to growth and delivering on projects in the pipeline? I don't know if you saw Bob Wilt from Marna earlier on, but he was sort of making the appeal of almost this is sort of a tech company that's almost sort of painting Marna in that sort of way to make it more appealing to young people to bring in. Is that, are you already seeing it as a problem in terms of delivery, or is it something you see on the horizon further into the future?
Yeah, look, I think it's a challenge for the industry, and I think everyone accepts that. And I think it's about how we communicate the industry. I think it's contingent on ourselves to explain how it is that mining is very relevant for young people and to bring them into the industry. I think there is some differences, though. I think if you're looking to go back to a model that was in place 30 years ago, where all those people came out of the West and from the Royal School of Mines, that's not happening anymore. I mean, the Royal School of Mines has now restarted its graduate mining program, but these people are not coming out of the US, they're not coming out of Australia, they're not coming out of the UK, and they're not going to. Not in any major numbers. So it has to happen in local markets, it has to happen in Latin America, it has to happen in Africa, it has to happen in those new places, and we need the standards of education in those local markets that can develop those local skills. Because it's not going to happen out of London anymore. But more than that, and we have to make the industry exciting, and I think at these margins on automation or AI and so on, the industry is fascinating. I mean, people that come and work for First Quantum, we give you a lot of play, a lot of room to move. You're given a lot of scope to really drive your own area, your own business area, and there's opportunity to progress that. Looking at investment bank or looking in professional services, you see way more opportunity. And that's because we need those people to step up and take experience. And that is a unique offering beyond the sort of the technology and the gamification and the automation that young people are interested, but they're also interested in making sure that the company is well-grounded with an ethical basis, that its community values are strong. And those are all very important as you look at talking to young people about the industry. Yeah. But we need to communicate that more.
Yeah. Ivan, I will give you the last word as we have 30 seconds left. How are you addressing the human capital challenge?
I think this is a tremendous opportunity also to partner with the public sector. I mean, we can provide in certain areas jointly with them, infrastructure, and then, the training, software elements, if you want, the software elements can be provided in association with the government. I think that's something that we do in the communities, where we operate. So I think that's a big opportunity. And the other one is really to install mining as an attractive profession at earlier stages in the formation of people. As Tristan was saying, in many places, mining is seen to be, or is recognized as an old sort of fashion industry, but in fact, the skills that are needed today around automation and digital mining and the way that technology is changing, our operations and projects require a very different skill set.
Yep.
And from that point of view, I think being able to establish that as an attractive proposition early on in the education of people is an opportunity as well.
Yeah. Great. Well, look, we are out of time, but thank you very much for your attention. And I hope that you will now all the people in this room have probably already considered a career in mining, but perhaps everyone can go out and tell their children and nephews and nieces. But thank you very much.
Thank you.
Thank you.
Thank you. Okay.